Hey, my name's James Dickinson and welcome to my YouTube channel. Interest rates are up. We knew that was going to happen. How much have they gone up? What else have they been talking about? I've just been watching the Bank of England, Andrew Bailey's press conference for 2 hours, so you don't have to. So how can you thank me for doing that for you and then dissecting it all? Well, very easily. Smash that like button because that really helps me with the YouTube algorithm. And if you haven't done already, subscribe to the channel and hit the bell notification. We're trying to get 10,000 subscribers. We're on the way, and our target this month is 100,000 views, which we're slightly ahead of target so far for August, which is really good. So, the Bank of England, what a long meeting that was. 2 hours. Normally the press conference, I think, is around half an hour when I've been watching them. If I'm totally honest, 6 months ago, I wouldn't give a hoot about these kind of things. I would just focus on my property business. But now interest rates are really having an impact on investors, homeowners, renters. Everything like that is really, really interesting. And so this is a big, big meeting. You see, inflation did fall. It fell more than we were expecting, but we still had a big rise in interest rates. So the interest rates have gone from 5% as a base rate. They went up 0.25%. 5.25% is the new base rate. Now, that's what most were predicting, but what were the other members of the Bank of England? What were their thought processes behind this? You see, there's 9 members of the Bank of England, and it wasn't as clear cut as you might think. And this could be an indicator of where we might end up. And so of those 9, 6 voted for a 0.25 rise, which is the majority of them. 2, however, voted for a 0.5% rise, which was interesting, and 1 said, keep it flat. 1 just said, don't move it, we've done enough, and that's interesting as well. And so we've always had 1 or 2 people that have said, look, we just need to pause and see what's happening. Now, there was some very interesting language, and you can read the Bank of England notes, which I did, but I felt that watching the press conference, you got a little bit more insight into it. So I just want to have to look down on my notes here to see what I've got. And so what they are saying is that the monetary policy now is restrictive. And so a number of journalists question them on what does that mean? And they feel that what's already happened, the interest rate rises that we've got, and if you put today's on top of it, that it is now doing something. It is now doing something. So they're expecting employment to drop, even if we don't have any more interest rate rises. And they're expecting people to start spending considerably less money as well. And that's interesting. And so journalists were like feeling that that indicated that they feel that the interest rates could have now peaked. And Andrew Bailey talked about various different paths and what might happen and what might happen and what might not happen. And some of the graphs that they were showing were talking about the possibility of deflation, maybe because we've got already this restrictive monetary policy now that could cause a crash in the stock market, could cause difficulty for employment and all these things. So that was interesting. And so maybe they're indicating that we might have a pause coming as the next one. They're definitely not talking about raising them too much more. Now, what they did say is that rates are going to stay high for longer than you think. And so they will never give a timescale on that. But they've said they're just hinting that we need to be prepared that rates will stay this high for longer. Or if there is a drop, they will stay higher for longer. And that was interesting. So people have interpreted that we're going to look at all of 2024 with rates at the sort of level that we've got today. And we might have to wait till 2025. Now, economy, where's that going? That doesn't look good. And so the economy, they're saying that we're unlikely to go into a recession. That's good. But what they're saying is that with these rate rises that we've had and the restrictive policy on like money lending and stuff like that, the UK economy is likely to be flat for 3 whole years. That's a hell of a long time. All the way out till 26, 27, we're looking at a flat economy. If you think about that, that's almost, if you take into account when COVID started, 2019, then early 2020, almost 8 years of this brutal stuff that's been going on. I think we all deserve a break and just to get a period of growth and some normality after what's been done here. So what else are they saying? So this was interesting. Inflation, that's what we want to know about, right? Because these rates are all determined by inflation. And so Rishi Sunak has said inflation, his target is to get it below 5.4%. He was going to halve inflation, and that would have taken it to 5.4%. The Bank of England think that by December that he'll beat that now, and this is a better figure than we had before. Now, there were reporters that challenged them and said, your forecasts have been so wrong all the time. How can we trust you now? Look, these could be wrong, but what they're saying is that by December, inflation will be down to 4.9%. And so that's inflation. But where will it drop in the short term? They're saying by July, well, July's data that they're expecting to come out in the next few weeks will be 7%. That's what they feel July's data is going to end up once that's all been tallied up. That's a decent drop from 7.9 to 7%. That's what they're expecting. And they're saying, this seems quite optimistic, but let's go with it. They're saying that we'll have 5% inflation by October. And they're saying that most of that is going to be helped by energy prices. And so that means that there'll be a little bit more of a drop. And so we'll get to 5% maybe by October. Maybe this is totally wrong. This is what they're saying, right? 5% by October. And then we'll have some flat months and then a little bit more of a drop just before Christmas down to 4.9. This one will stir up some comments, I'm sure, by you guys. So they were asked, what impact are these interest rate rises having on the housing market? They're saying that the housing market is still pretty strong. And their indicators are saying that while it will have an impact on house prices inevitably are going to go down. Demand is down for sure. Transactions are going to be low for at least a year. What they feel is that the housing market is stronger than some might think. And so they feel that the drop won't be too bad. And because the reasoning behind that is that a lot of people are still in decent deals. They've got decent fixed deals for a prolonged period of time. There are headlines where we talk about 600,000 to 1 million people that are coming off a fixed rate. Yes, but there's 30 million homeowners in the UK, right? And so while those people will really struggle and suffer, they do have opportunities to go interest only, to extend their loans and various things like that. They just feel that the housing market is more resilient, is the language that they're using, than maybe they were expecting. So that's maybe a positive for property investors from this. So did they give any indicator on when interest rates will come down? No. They were asked that question by at least 5 journalists. When will the interest rates come down? They're just not giving anything away. They never would, right? Because if they did that and they said, look, we're going to drop next month, then today's interest rate rise would be a pointless exercise. They've got to act as if this is possible, that it will keep coming up, keep going up. And so people take action, curb spending, and inflation comes down. That's their primary goal. Now, interestingly, some of the inflation targets further out, like 25, 26, were like under 2%, like 1.6% in some of the graphs. And that's interesting if we're going to go that low. So who knows? But the fact is, they're saying as well, with regards to mortgage rates, that they're not expecting this 5.25, that many lenders will pass it on. Now, if you're on a variable rate, then that might happen. But on new deals, they're saying on deals that you can move on to, they feel that the market's kind of really got where they're going to end up, and those sort of rates we're seeing, and they were talking about banks are starting to reduce rates to get more business and be more competitive, and so they're not feeling that the mortgage rate will make that much of a difference. So when I'm listening to that, I'm thinking, well, what's the point? What's the point of putting these interest rates up? The thing is, they've got to be shown to do something, right? And so that's what's happening at the moment. So what do you think about today's interest rate rise? How is it going to impact you personally? Are you going to stop investing? Who knows? I'd love to know. I've just bought somewhere yesterday, and so I'm going to get you a video on that as soon as I can. We're going to be buying cash. It's a Dorking property, so I'm going to be showing that to you guys. It was going to be on a lease option. We were talking about that, weren't we? It's not anymore. It didn't work out. It just didn't work out for that person. So we got an extra discount to be able to take it cash, which was good. So I'll stack up all the numbers. I'll give you a tour. We need to do a refurbishment there, so we're going to be back in there showing you what we're doing. It's not a massive job. It's a smelly house. It needs painting, it needs decorating, it needs new carpet, new flooring, like barely much needed. It's going to be cool. So that's it. I'm looking forward to sharing that with you guys. Do check out all the other content. Help me get to 100,000 views, guys, by smashing the like button. Watch another video. Go and check out this video right here.